Hello, this is David with you, and it is Saturday, the 30th of March, 2013. We're getting ready to post the April edition of the Morgan Report, and I thought I would try something a bit different this month and kind of go through quickly what this month's report's all about. For those of you that aren't paid members, this is the format, and the front page always has a quote of some type. This one, of course, is talking about how interesting it is that we see a physical tightening in silver, the physical side of things, and yet the price isn't reflecting that. Later on in the issue, we discuss that. Normally, there's an editorial, which is this month. The Cyprus is one of the driving factors that I'm sure most that pay attention to the sector are well aware of. Obviously, not going to read it to you, but we talk about that a great deal. And one of the other things that we talk about after we go through the news and give you our opinions on it is something that we started last month. Let me stop here and back up slightly. Here's some of the price forecasts for silver 2013. As you can see, CPM Group is kind of at the bottom with the price of under 30. And, of course, Deutsche Bank is sitting there at 44 at the high end. Our projecting is 40 with the stipulation that it's possible in a panic-driven situation or even just with what's going on in the global economy, we could get a quick sudden shift in gold and silver, and we could get some real quick spikes to the upside. We don't rule that out. We're not actually predicting that that will take place, but that it could take place. Moving onward, coming back on point, I want to talk about what we started last month, which was about the amount of new silver coming into the market potentially over the next several years. We started that discussion last month on silver mining supply, and as it says, continued from last month. Last month we talked about it in a more generic way. This month we went through and looked at it on a mine-by-mine basis in a manner that would be similar to a report that you could buy from CPM Group. I think it's like $8,000 to $10,000 for that report. Something, it's rather expensive. Ours is not quite as detailed, but almost. You can see here that we go through several mines and give the exact numbers of what the forecast would be and reach some conclusions. But what I want to state for the record for the public is that the projections are greater than what I had initially outlined in the 2010 look at mining supply. In a perfect world, where there are no problems whatsoever, if everything came on stream exactly as forecast, and of course that's a pipe dream in my view, doesn't really occur, but if it were to occur, you would continue to see increased mining supply beyond the 2015 timeframe that I initially talked about when I first looked at the study back in 2010. This is obviously 3 years forward from that, and things have changed. What the bottom line is, we don't know. I would still submit for your consideration that there is not going to be a substantial increase in mining supply over the next, beyond, say, 2014, 2015, for reasons beyond just metal in the ground. It'll be because of several issues that come to the fore, energy, water, global political problems, etc. Moving on, we went through and looked at the earnings for several companies. And of course, it came down to what we always have at the end of the report, several of our comments on issues that our paid subscribers write in and ask. I sort through those every month personally, and I usually pick ones that I think would be the most benefit to everybody and comment on those. And lastly, of course, we have the asset allocation model. And we are doing okay, certainly not as good as we have done in past years. This latest one that I talked about rather significantly the last month or so is already up 23%. So this one that was such a rich superstar seems to have caught attention of at least some investors. And in a month that's been flat to down on the metals themselves, this particular company is up 23%. That pleases us. I'd love to say that every one of our picks is, but they are not. Nonetheless, we think that we're near a bottom here, and that it isn't going to be too much longer before we see a significant increase in the metals prices and, of course, the underlying equities. So that will do it as a kind of a brief summary of what's going on in the issue that will be posted this weekend before April 1st for the paid members of the Morgan Report.